Welcome everybody to the SNN Network Canada virtual event. I'm your host, Robert Kraft, and thank you all for joining us today. I'd like to take a moment to introduce our next panel here at the event. This panel is titled Finding MicroCap Canadian Opportunities Using the Leishman Methodology. This panel will be hosted by Harold Leishman, the Senior Investment Advisor at Canaccord Genuity Wealth Management. And with that, Harold, take it away.
Thanks so much, Robert, for the introduction. And you're going to kill me with that Leishman methodology business. But what I do, I head up the small cap growth portion of our wealth management practice. And for our clients, we manage an incredibly comprehensive set of data covering 80 to 100 companies. We track 3 years of financial history, including revenues, margins, growth rates, and changes to the capital structure. We then rank by 20 different data points or sets of data points. And our model suggests that if you have a combination of relatively low valuation, high gross margins, high sales growth, and generally they're a pretty good predictor of future higher share prices. In addition to compiling historic data, we also scour every press release of the company in our lists, looking for potential catalysts for growth. And an obvious example of such a catalyst is acquisitions. And while I love, a great quant model, I spend a lot of time crushing data and putting in different inputs. I think that most people agree that with small companies, it's all about the jockey. It's relatively easy to look at the numbers and sort of armchair quarterback the results. However, it's much more difficult to actually manage the execution of the plan to generate those numbers for success. And M&A in particular requires a skilled CEO. So my focus today is going to be on M&A. Today, we have leaders from 3 management teams that have executed M&A in the past and are currently in the process of completing meaningful acquisitions as we speak. First off, we have Chris Dobbin. Chris is the president and CEO of Novaleap Health. He's a CA. He is the recipient of numerous awards for his work in private equity and is an Ernst & Young Entrepreneur of the Year, a 2019 winner for Atlantic Canada. Novaleap is a non-medical home healthcare services company. They provide in-home support for seniors with an emphasis on those requiring dementia care. It's a geographically diverse operation, active in 7 states and 1 province. They're a prolific acquirer with 10 acquisitions in the last 2 years. Novaleap has a current trailing 12-month revenue run rate of approximately $20 million US and is targeting a run rate of $30 million US by the end of Q1 next year. They have recently announced a number of acquisitions that puts them well on the way to achieving that target. Next up, we have Cameron Watt of Intouch Insight. Cameron has an MBA and over 30 years experience in the service and consumer products industry. He has held management positions at behemoths like Pizza Hut, Frito-Lay, Mars, and Unilever. Intouch Insight develops managed mobile software applications and SaaS platforms for businesses, governments, and regulators. They provide real-time information on leads, customer feedback, operational compliance, and new product analysis through data collection programs, including mystery shopper, site audits, event lead capture, and mobile forms. Cameron completed 2 acquisitions for Intouch in 2019 and recently announced an acquisition that adds $5 million US in recurring revenue. Combined with their current growth rate, they should achieve 2022 revenues in sort of the $22 to $25 million range by my count, representing in excess of 50% revenue growth. Now, the final one is a company called Nanalysis. There was a bit of a change here. We were going to be speaking with Sean Krakowski. Now we're dealing with Luke Caplette, the CFO. So my notes are about Sean, so I'll just give his quick background because he's the CEO. This is his 3rd tech startup. He's raised over $25 million in equity funding over the years. He has a master's in electrical engineering, and as impressed as I am with his business track record, I'm perhaps most impressed that he was drafted to the LA Kings, playing on their farm team for 2 years before dropping the gloves to take on electrical engineering. Nanalysis has produced and sells award-winning spectroscopy instruments for a variety of applications across a broad spectrum of industries, including pharmaceutical, academic, mining, oil and gas, and cannabis. They have made a series of acquisitions in recent years, including most recently announcing the acquisition of a company called K-Prime that will add 8 to 10 million of revenue to their existing trailing 12-month run rate of 12 million. So, 80+% sort of revenue growth there. Lots of three teams with lots of depth in the M&A space. And so why don't we jump into the questions? And I'll give the order that people will answer, and then we can have a greater discussion. So question number one, when considering the acquisitions you have made or are making, can you explain how you expect to generate synergies beyond just adding top-line revenue? And what, if any, value does your client get as a result of the combination? Chris, do you want to start?
Yeah, sure. I'm happy to. So we look at synergies more on an incremental basis. So to us, again, we're in the home care space, so we're always looking at ways to improve cash flow. And it's not just expense synergies that most often folks look at. For us, a little bit different. So we do start actually with top line revenue and figure out, are there ways to improve the billing rates, for example, as a company under market, right? So that's one way we look at it. Sometimes we've encountered agencies that have probably not hiring as well as they should be. So the overtime rates are too high, which impacts the gross margin negatively. So there's some improvements we can make there. There may be instances where there's just expenses that are happening, within the office that are perhaps unnecessary. And we have consolidated the back office functions primarily around the accounting, billing, and payroll functions. And we do bring a common technology platform, particularly around scheduling, which is pretty important within our industry. So from a synergy perspective, we really look at it incrementally, but we don't just solely focus on expenses. So I think that's how I'd answer that question. In terms of the second part of the question, what's the impact on a client? We really think of our clients from two perspectives. One is we look at our staff as clients, and then the second is we look at the end user as clients. That's really the way we look at our business. From an end client perspective, typically that revolves around the training that we're providing to the caregivers. So our belief is we're providing additional training, particularly around dementia, those we provide the service to primarily. A lot of the agencies provide dementia care, but there's a very specific program we've introduced that I think enhances the training. So it allows, number one, our caregivers to provide better care, which obviously produces better outcomes within the home. So that's primarily one of the benefits to our clients. And the second thing is, as a larger entity, which we are in the US, we offer different types of medical insurance that is unavailable typically for the smaller agencies. So again, as we think about our caregivers and our staff as clients, then that's something we bring to the companies that we acquire.
Excellent. All right. So interesting. You think of it as your employees, as your clients, as well as sort of the end consumer, and trying to generate benefits for everyone. Excellent. Cameron, do you want me to restate the question, or do you have it?
I think I got it. I heard Chris answer it, so I'll just follow whatever he said, and then it's starting to need to hear the question. It's that easy, right? You hear the word synergies, you hear the word acquisition, particularly when you're talking to shareholders, potential shareholders, the immediate, mentality goes to financials, right? How are you going to increase gross margin? How are you going to drive, costs out of the system, right? And obviously that's important. And we wouldn't buy anything on our side if we didn't think it was going to ultimately be accretive to the business and to the shareholder. But honestly, we look at synergies when we're looking at an acquisition, much more in some of the areas Chris is talking. We care more about what are the actual business synergies. If we buy this, how does that clients that, because we buy companies, of course, that do B2B, right? And so when we buy a business and their clients, the companies they serve Are they similar to ours? Are they in a similar type of industry that we're in? Or are they zebras on the horse farm? Right? Because because it's very difficult to get long-term synergies if you don't start with some immediate synergies in just terms of the business, how it's run, the customers, how the customers are managed, the product being sold to the customers, all of those things. You know, we're not looking just to buy a business that is in a similar industry or that's adjacent but happens to be profitable and we can buy it at a good multiple. You know, we want to buy businesses where they actually do something that is synergistic with what we do, right? And with what we do day to day and what our people deal with day to day. So when we bring it in, we can not only get those longer term cost synergies, but we can also get customer and growth and cross sell and upsell and all those other synergies that you get once you can get them into the house, right? And I'll restate something. Chris put it differently. He called them his clients. We don't use that language, but we say that we're people focused. And so we look at our customers as people, but we look at our staff as people too, right? And since my business is helping companies deliver better customer service, you know, then we kind of have to be people ourselves, right? Including our own service to everybody around us, including our people and our employees and our customers. And so that synergy, when it comes in and it's common ground from day one, it's amazing how well the people just get together and they come together. And so we focus more on that, while of course ensuring all of the normal financial due diligence and all of the controls are in place, that we're not expecting to buy something that's non-accretive, you know, as you go through time. But we don't focus on whether we're going to make money, you know, more than we pay. Like that's not, you know, we're more, is this business valuable? And when you combine it with our business, do those two things together create value, right? And that's how our clients, the second part of the question, ultimately get their value, right? Is that if we bring two things together that are similar and common, we get to, you know, we learn from each other. So we buy a decent sized business, they might be doing something a little better than we're doing. Well, that now gets crossed over to our customers, right? They get to benefit from that operational efficiency or that better way to do things. In terms of the clients we acquire, well, they pick up all of our technology and all of our differentiators and advantages that we have in the space, and it cuts across that way. So when you start with the same businesses and good businesses, you just get to share everything, and both sides pick up immense advantages every time you do a good acquisition, just through sharing of learning and just through improvements in knowledge. And so it's cool if you look at it that way.
So it sounds like, well, with all M&A, of course, you know, these companies are trying to take a 1 + 1 = 3. And I know some people hate that sort of that reference, but you know, it's more than the sum of its parts, I guess. And that's the challenge. And I guess that's where the magic comes for any of these acquisitions. All right, Luke, how about Nanalysis? How does it consider synergies from acquisitions? You guys have made a couple here recently and a very large one as well.
Yeah, those are two good answers. Tough to follow that, but you know, we kind of look at our acquisition strategy. It's not a roll up, so we're looking for complementary businesses with great people, great technology. A lot of times they're usually smaller companies that are, you know, a little broken. So we can go in, we trade at, you know, 7.5, 8 times revenue. We can go in and buy these companies for 1 times revenue and alleviate a lot of the problems, right? So sometimes it's a CEO who's kind of been, you know, just pounding the pavement, working on this thing for 10 years, probably a PhD, smart guy, great technology, great product, but he's got a lot of business problems. And he's not a, you know, he's not a true and through kind of entrepreneur businessman. He can't go out and raise capital. So we get to come in, kind of take a lot of headaches off. We empower all of them. They all get stock options. We do healthy earnouts because we're all working towards the same kind of shareholder value. And we alleviate all those problems. We can handle HR. We have some finance help here for you. We have some capital. So maybe you're a little risk adverse into jumping into this market that we believe in. So we see lots of synergies on that. We see a lot of growth from the companies we acquire by giving that back-end support. We also see synergies, like we just purchased K-Prime's a good example. So they're a full sales distribution company. So we just acquired a business that has roughly 40 salespeople that are knocking on all the same doors that we would if we had 40 salespeople throughout North America. And so it's instantly accretive for us on that front. So we're really excited about the K-Prime acquisition. And then I guess just end users, really high level. We manufacture all of our products here in Calgary. So we're really proud of the quality We hold our tech and our IP really closely. So we're really proud of that. But we're also acquiring all the pieces. So we're basically vertically integrated, which I think is like fantastic. So if you look at our one acquisition, RS2D, we acquired an electronics platform for our spectrometers. So they're a great company based out of Strasbourg, recently acquired them. Now we control our entire electronics platform for our devices. We also were third party using software. So we said, no, you know what, we should have our own in-house software. And so now we have a full unit that we assemble from the bottom to the top. And we can make sure, each department speaking to each other, our machines are just a higher quality for our customers, because we are looking at, every single step along the process, and we control that the whole way through on our manufacturing.
Yeah, that's fantastic. I know when I was looking at your business in the acquisitions, it was, a compilation of some very disparate parts. If you're going to go out and sell one product and all the other products are required, you might as well do it all under one house, and it should be more lucrative going forward. And I know you guys have like an award-winning product, so excellent. Why don't we move on to let's move on to question 2. When evaluating acquisitions, how important is cultural fit, and how do you support or extend your corporate culture? Why don't we start with we'll start with Cameron first this time. Put him in the hot seat.
Well, that's perfect, since this is kind of what I said we do acquisitions for. So it works for me. I'm okay to start with this one. Corporate culture is something that, honestly, if you ask me what the one holy grail we protect at the company is, it would be corporate culture, probably beyond anything else. When I took over, there were some broken parts of the culture from my perspective. You heard earlier, I was introduced, I've worked for some of the largest companies on the planet. And I have seen some fantastic examples of good, strong corporate culture and behavior. And I have seen some deplorable behaviors that when I write my book, I'm going to throw some of those in there without names. You've seen it all. And so one of the things we're really, really careful about at Intouch is that our culture is people focused, and that we do remember that we have to have our own people happy and satisfied if we ever have a chance of making our customers happy and satisfied. And by the way, given that that's what we do for a living is customer satisfaction, I actually have research that tells you that if the employees are not happy and satisfied, the customers are not happy and satisfied in general. I mean, that is just a fact of life. And we all get that when we think about going to a grocery store, that if the clerk is having a bad day and hates their job, you're not going to like dealing with them. And we get that intellectually. But it's the same for all of us. It doesn't matter what we do. It doesn't matter if we're in a big company or a service business or building software. It doesn't matter what we do. If our employees aren't happy, I guarantee you, your customers are not getting what they could be getting if your employees were happy. It translates from the grocery store to any other business. And so for us, that culture, and particularly given what we do, for a living, is so important. And so when we're looking to buy companies, culture is probably, the first thing that we look at from a fit standpoint. We have more than just, me and the CFO going down to talk about numbers, right? We have people interview and talk and get to know them and go for lunch. And we try to understand how they run their business and what they value. And do people like working there? Why do they like working there? You have to know all those things, because it's really important when that business comes in that you're able to assimilate that culture. Because you've only got a few outcomes when you bring in another business, especially if it's of a decent size. If you bring in a good sized business and those employees have a different culture, and it's not one that you would ever want to promote in your own business, you run the risk of them infecting your employees, right? Or you can have them come in and your employees infect them, right? Or you can have trouble getting any kind of, coming together, and everybody wants to do their own thing. And there's only a few outcomes. And so the outcome we always strive for is they have to come into our culture. But if somebody starts our experiences, if somebody starts too far outside that culture, you may never be able to get them in. And so we very, very much aggressively look for culture where it looks like somebody will not fit into our culture, which, by the way, the culture is very entrepreneurial. It's very, people are not micromanaged. They're allowed to make their own decisions. They're expected to do what they would do if it was their business, right? And we have a fantastic retention rate as a result of that style. And if anybody comes in who wants to, and by the way, my experience is it's not employees who have a problem when you bring them in from a culture standpoint. Employees don't like bad cultures either, right? Or don't like cultures that aren't that way. It's managers who like to have silos and control and power and worry about those things. So the first thing we do is we take a look at the management layers when they come in, and if there's people that aren't going to make it because they're not going to make it, then we just clean out the management, and we keep, because the employees are usually the people who want to do the right things. And what we try to do is buy any company that fits already, like the one that we just purchased. Honestly, every single manager there got our culture because they had a similar culture coming in, and that's what we look for, because we don't want to have to get rid of key people or people in management roles because they don't fit culturally. But we will if it's that or them being there. But we try to hire where we don't have to.
That's a fantastic answer. And culture is one of those soft topics that is kind of hard to define really well, and until you're in there dealing with people, it can be a challenge, and having to unwind things can be expensive. That's a great answer. Luke, why don't we jump to you? Your company is made up with lots of PhDs and master's degrees people. I suspect there's a little bit of quirkiness. You have also pretty good geographic diversification from North America to Europe. Culture, how does that work in your organization when you're looking at acquisitions?
Yeah, no, it's probably going to sound like a regurgitation from what Cameron said, because I agree. Our people are obviously first and foremost the most important part of our business. They're the reason we're successful today. I think we have roughly 25 PhDs, 30 masters, and I think 40 bachelors right now working for us. So we have a very, very intelligent, motivated workforce, and we're proud of our culture. So I've only been with the company for a little over 2 years now. And so I've been just kind of mind blown. What I'll give kudos to Sean. So he started this up 11 years ago. And a lot of the successes, he still has the same management team that he started with 11 years ago, which speaks volumes to, just the culture. People are happy here. They love coming to work. And a key piece of that in our acquisition strategy is making sure that whoever we're acquiring fits in within our culture, because we've seen tremendous success for it. And so to enable that, we do the similar things that Cameron was mentioning where, we're not unfamiliar with these businesses. These are businesses that we're, day-to-day involvement with. We're doing collaboration projects. Maybe we have an OEM deal with them. And so we're comfortable with working each other. We've kind of cross-pollinated some departments, and we know that there's a fit there. And that's really important, because a lot of the time we're doing an acquisition so we get these people. I mean, RS2D is a good example. We brought over their CTO to be our CTO of the entire company, because he's just a fantastic addition to the team. So culture is always a key element. And I get asked it all the time in lots of meetings, one-on-one meetings with investors, and because they always want to know, if your acquisition strategy, are you thinking about culture? Because if you're not going to be successful in your acquisition strategy. It's just not going to happen. And so we've been lucky to date. I think we just brought on great people, and we haven't run into any issues on the culture front, and we've meshed quite easily.
Certainly must help to have some sort of operating experience in the past, collaborations on projects, and or sales and or technology or whatever. But that's impressive. That I always sort of figured that much brain power, might naturally have, more challenges. So, good for you guys for keeping it going that well. Chris, do you want to weigh in on culture? You've completed, lots of acquisitions, have a very high employee count. I know we've talked a little bit about culture in the past, but can you sort of detail Nova Leap's approach to culture and M&A?
Yeah, it's interesting. I mean, I think we've completed 16 acquisitions. We've announced 3 more. I mean, we're approaching 20 acquisitions over the span of 5 years. So, on average, 1 a quarter. We've gone from obviously just a concept stage to, north of 750 employees. We're spread across 2 countries, 7 states right now, in a province of Nova Scotia. And I feel pretty lucky in many respects when it comes to culture. And I'll say I give credit to the owners that we've dealt with. There's a reason why we like the businesses that we've acquired, because they've been successful. And we spend quite a bit of time with the owners and getting to know, their history, why they built the business, why they founded it, And it generally in our business has to do with the fact they've looked after a family member in home care, right? Someone had dementia, they had to look after mom or dad. And so there's usually this draw, this family connection, much like there was, in terms of why I started. So there's this good reason why they're in it anyway. And we try to really understand what they've done to grow the company, who they've hired, why they've made the decisions that they have. And again, I'll give credit to the owners, because of all the acquisitions we've done, we really haven't had any issues post acquisition. And I can think of a couple cases where, we were going through due diligence and we discovered a couple of things where we felt like the folks we were dealing with weren't necessarily being honest, and we just walked away. It didn't matter how successful the business was in that case. It didn't matter, what the cash flow was or what the multiple was we could acquire it for. We walked away. And it was as simple as that, because we know what we've been successful with, and it's been buying good businesses with honest owners. That's where our success has come from. So that's a starting point for us. The second thing I'll say is that we actually respect the local cultures. So we don't rebrand under the Oak Leaf brand. We keep the local brand. To us, it's about local people, local referral sources, local operations. And I do look at it from the perspective of empowerment. So I believe that when we're acquiring these companies, we're creating, better opportunities for upward mobility for the folks that are working in the offices. Usually what happens is we can identify somebody that can internally within the acquired business that can replace the owner. And so that person's taken on more responsibility that he or she may otherwise not have had if the owner stayed. And we've had a number of cases where we've had someone who's taken on the responsibility to perform great in their job, and then they've taken on a second agency or a third agency. So they've gone from working for an owner to becoming an agency director, becoming a regional director responsible for multiple agencies. So again, I go back to the owners who've been fantastic, because there's a reason that these businesses have been successful. We try to empower the local, office staff within the areas that we've acquired into. And really, we just work to support them going forward. So it's a model that's worked out really well for us, but that's typically how we look at culture.
That's fantastic that within the business, people can advance their careers and go on to try to achieve things or achieve opportunities or targets that they wouldn't have otherwise had a chance to. I think that's got to be a great driver for performance at the gross corporate level, but also at each sort of units level. I think we're doing pretty good for. I think we're doing pretty well for time. So we got another question. What are some of the challenges that you have encountered that you didn't see coming, other than a global pandemic? Because we're probably all tired of talking about that. Or put another way, what keeps you up at night with regard to acquisitions you have made or are thinking of making? And why don't we start with Luke to go first for this one?
Yeah, great. So what keeps me up at night on acquisitions? I guess honest answer there would be, we spend a lot of time doing due diligence. We're familiar with these companies. We put a lot of reps and warranties in all the agreements, but there's always that concern that we missed something during the due diligence process that's going to come out of the woodwork. Knock wood, to date, we haven't found anything. Nothing detrimental has come up. We've been pretty lucky on that front. I'll give a quick kind of story, I guess, on something that came up. It wasn't detrimental, but it was just kind of a curious culture piece. So it might kind of relate back to one of our earlier questions. But we empower all of our people, and we give them all stock options because we want everyone being owners. In Canada, very common. Everyone really understands stock options, how they work, what they're worth. Usually have brokerage accounts. We did a presentation in our Strasbourg office in France there, and we asked everyone, hey, can put up your hand if you have a brokerage account. And not one individual in the office had a brokerage account. And so we provided some stock options to these people to incentivize and motivate and say you're part of the team. And we had to take a step back and realize, like, we've given them these things, but they don't understand what value is here, why 10,000 stock options at a 50-cent strike price when you're trading at $1.50 is really good. And so there was like an educational piece where that was a bit of a cultural learning thing. And I won't say it was it wasn't something that came out of the woodwork or was detrimental on the acquisition front, but just kind of a curious piece that came out after we closed the deal that we didn't really think of.
Excellent. Well, if you ever need help with the stock options in France, you can always call us. We'll do our best to help you guys out. And it's interesting. You talk about, you've got all the reps and warranties and the contracts, and I've always sort of felt if it comes to the fallback position where you're dealing with a contract, then you've truly got a problem, because then you're down to lawyers and interpretation, and it can be
long and arduous and expensive.
It can be a pain in the butt.
Yeah.
Chris, do you want to weigh in on challenges you've encountered or things that keep you up at night with regard to acquisitions?
Yeah, I mean, maybe a couple things just off of my head. I mean, one, most of the owners have never been through a transaction, and so it's very new for them. And so I think there's just a lot of communication that has to go back and forth, and sometimes they don't have a transactional lawyer, so a lawyer that's dealt with transactions in the past. And actually, I find that difficult because that can delay things and add costs that are unnecessary. So, I wish all the owners were represented by, well-established law firms that were transactional and had that type of experience, but it's not the case. So I find that sometimes transactions that ought to happen quicker, get delayed for different reasons. So, that's sometimes a challenge when you're dealing with folks that, from an M&A perspective, are a little bit unsophisticated. The biggest challenge in our industry is staffing. I mean, you think about the demographic and aging population, the demand for home care, that's never going away. So the demand side is always there. It's just trying to meet the demand, and that's the challenge, is to get the appropriate amount of staffing to meet that demand. And so we spent a lot of time thinking about that, and it's probably the biggest challenge. It is the biggest challenge in our business right now.
Right. If only everyone could be a private equity specialist and understand contracts and deal making, life would be easier for everyone, right? Simple.
Yeah, that's right. I mean, I don't want to come off too hard. It's just the point is, it sometimes takes a little bit longer to get things done than it ought to, and usually when that happens, that means there's an increase in legal fees, and I like to watch the numbers, so I don't like when that happens.
Absolutely. I think you're not alone. I think there's lots of businesses right now that are struggling on the labor front side, post pandemic. But great answer. Thank you very much. Cameron, do you want to weigh in on any sleepless nights you've had regarding your acquisitions or challenges you hadn't previously considered?
I mean, look, Chris and Luke are, on two different timelines, but they basically answered we're all dealing with the same stuff, right? During the acquisition, it's all about how the other side is acting and their advisors are acting. And, and Chris talked about not everyone has a transaction lawyer, but my experience is, even if they have one, but they're in the US, you're also in for a whole different level of cost and pain than you are if they're a Canadian. So, and that's clear. And I completely agree with Luke. I'll rephrase it, but after I bought something, no matter how much due diligence, as he says, you've done, I'm just wondering, did I get what I paid for? So what do I worry about afterwards? Did I get what I paid for? That's it. It's that simple. I bought something. I'm expecting something from it. Did I get it? And in our case, with clients, it take, because really we're buying contracts and clients and knowledge bases and things that we're not going to know the next week, the next month. It's going to take quite a while for us to know if we got what we paid for. Now, so far we've been very fortunate. We've always got, I'll knock on the same piece of what Luke did. So far we've been very fortunate that we have got what we paid for. But that's the biggest thing is that you didn't get it wrong, and hopefully you get it right almost all the time, if not most of the time, and never large enough on the wrong side get you in trouble, and that's all good.
How long do you think it takes before you can sort of get that sense that you've got what you paid for, or it was what you thought it was, where you have that sense of confidence that I did the right thing, I bought the right deal, or
Yeah, I mean, pre-pandemic, no. So the reality is that it depends on the timing. For me, it depends on the timing of the buy. If I bought something in June, I'm probably not going to know until January the next year, because that's when all the contracts have renewed, and I know that my recurring revenue is safe for, and people are all happy with this, right? You buy something in October and you may not know till into Q1, because you get that feedback from the clients, and hopefully they're like, oh man, this is great. We're so happy that you did that acquisition. We love all the new systems and new software. So it takes a while to get the clients integrated, using it, seeing the benefits, and where you feel like, oh yeah, this is awesome. Revenue's where it's supposed to be, clients are happy. So I would say it's anywhere from 4 to 8 months, depending on when you buy it, in my case.
Perfect. Well, I think we've got time for a bonus question, which I'll throw out. I don't have an order necessarily, so I'll just sort of do it randomly. So capital market strategy, I mean, you're all here participating in a capital markets conference, so I'm assuming that it's meaningful to each of you. So the question is how do you find the balance between operating the business and communicating to the capital markets, or how important is your capital market strategy to your business for maybe potential future acquisitions? And why don't we just start at the beginning? Why don't we go with Chris, and we've got a shorter time frame, so we'll just ask everyone to be concise.
Yeah, I mean, we look at it as being important to our strategy. We want to get the message out there. Obviously, we've raised money in the past, or several years, a few private placements. So we've always done that at a higher price. We've never had down rounds. So that's a function of people having a look at you and believing where you're going in the future. It's an interesting balance between that and operations. I mean, I have great operators. We have regional directors, local operators, a VP ops. So I'm very aware of what's going on a regular basis. I have lots of communication with the staff, but I have people to handle the operations. And so the way we look at the capital market strategy is often a function of where we are in terms of market cap, right? We're roughly $50 million Canadian market cap. It's really small. It's kind of a bit of a no man's land between getting institutional buyers and some of the smaller micro-cap funds, right? There's a bit of a gap there, and you often have to fill that gap before you get to 80, 100 million before larger players come in. And so there's some messaging there that I think certainly happens on the retail side. So again, it's important for us just because we're a serial acquirer. We're going to continue to acquire. We've indicated by the end of 2026 we'll be north of 100 million. So it's an important part of our strategy for sure.
I certainly appreciate that gap. That's why I like to sort of play in this space. It's kind of just before institutions can kind of get involved and hopefully drive valuation. I know in your case, management led the first, I forget how many rounds of financing.
Several.
Yeah, you guys put your money where your mouth was, so that's always a great indicator. But you are getting to that point where you need a broader audience, and if you're going to grow to that lofty number, you'll need some more capital at some point, presumably. But great answer, thank you very much. Cameron, do you want to weigh in on capital market strategy?
I mean, real quick, I guess my answer here is sometimes a little different. Some people, some investors love it, and some people don't like it. But it's always that we're actually focused more on the creation of real value in the company than we are on whether or not we're currently getting that value in the market. And that's because of that tricky part of finding that balance, right? Which you talked about. Like, how much time do you spend operating the business, which I call creating the value, the actual real tangible value of the business, and how much time do you spend making sure that you're doing a capital market strategy to capitalize on that value you're creating? And I just generally feel that we don't always get the balance right. We're trying to get better at it. The pandemic swung it all the way operational for a while, and now we're starting to find that balance back towards capital markets again. But at the end of the day, as long as we're creating more value than we're receiving, I'm okay, because I know I can get that at some point. I just never want to be on the other side of that equation where I may be getting more value than I'm creating. So it's very careful with that balance.
Certainly, that's what our team's trying to do is find companies that are creating value and are sort of undiscovered. And we like seeing companies with great revenue growth and a focus on profitability and building bigger, better businesses. It provides, we think, great leverage for our clients. Luke, you get the the final word on the questions, because I think we're just about out of time.
Perfect. I'll keep it short and sweet, but yeah, to put it in one way, I guess our capital market strategy, we are very vested in it here. We find it very important. And a great example is we kind of parked it a bit for 2020 as we went through our lovely pandemic that seems to go on forever. And so, we're probably around a 40 million market cap company coming out of 2020. We knew we were posed for like some significant growth this year with some new products coming out. And we've demonstrated that with 110% revenue growth year over year, which we're really proud of. But without our capital market strategy and without, actually getting our story out to investors and telling people what we do, and our story is a little complicated. I mean, not a lot of people know what a spectrometer is or why that's cool or why it's important or why our little, tech company in Calgary is actually worth investing in. So it's important for us to kind of educate some of the investors on what we're doing and why it's a really unique and interesting space. And so that's been a key kind of driver in the growth, because we've gone from 40 million market cap to I think we're around 118 to 120 million today. And that was in a year. And that was just, we're doing a lot of great things. And if we're not telling people about it and letting investors know and telling our story to the world, it just goes unnoticed. So it's a key element for our success.
Yeah, I specifically didn't get into trying to explain in too much detail exactly how your machines work. I was just happy that I could say spectroscopy without tripping over my own tongue. And you guys had a very successful raise recently. I think it was $11 million you raised. So obviously you're doing something right in the capital markets. So congratulations, congratulations for that. I'm out of questions. Robert, if you want to weigh in or cut me off. I will say I do own a stock in each of the companies that we've interviewed today. Although I'm just meeting Luke for the first time. I've known Sean for a number of years, and I'm also speaking with Chris and Cameron for several years as well. So thank you all for your time. I really appreciate going over some of these more softer or qualitative issues to help sort of complement the quant or the quantitative information that drives sort of the bulk of our decision making. So thank you very much.